Hello and welcome to this episode of the Energy Connects podcast, where we bring you the latest analysis and insights from the world of energy. I am your host, Chiranjib Sengupta, and today we are talking about all things ESG. More specifically, we will be diving into the trends shaping the ESG and the climate transition space in the Middle East. And for that, I'm delighted to welcome Deepika Sriram and Sergey Shiposha, both of whom are managing associates at Linklaters. Deepika has extensive experience advising on cross-border transactions in the energy sector in Europe and the Middle East, and has spearheaded Linklater's first Middle East ESG podcast. Sergey, on the other hand, heads the Middle East ESG debt capital markets practice of Linklaters and has extensive experience advising issuers and underwriters across various sectors on a wide range of capital market transactions. Deepika and Sergey, many thanks for joining the Energy Connects podcast.
Thanks for having us.
Now, both of you are the co-authors of Linklater's Middle East ESG Legal Outlook 2023 that came out recently. With that report as a starting point, could you walk us through the region's ESG landscape as it pivots to a low carbon future?
Sure, I'm happy to begin with this one. We would say that there have been two key areas to focus in the region as it pivots to on its net zero journey. One is the regulatory side, which we will touch upon a little bit later, and the other is really driven by the economic factors and the consumer preferences. With the economic factors, we've seen a lot of transactions in the ESG space where the investors are really striving for more accountability and more transparency in as regards ESG, and we will touch upon certain on these transactions a little bit later on in the podcast. But we're really seeing a pronounced increase in investments that are linked to sustainable projects, and those are driven both by private investors, public investments, or private and public partnerships. Obviously, the consumer preferences are changing, and we're seeing a lot of activities in the community space here as well. In terms of the region, when we talk about the Middle East, one important point to mention is that Middle East is one of the most vulnerable regions when it comes to ESG, and perhaps a separate acute pressure point which we're seeing is waste management in the region. Some of the nations in the region have started tackling this problem. For instance, Saudi Arabia in 2021 has issued the waste management law, and also in the UAE, for instance, we are seeing such developments and initiatives as, for instance, extra charge for plastic bags in retail grocery stores, and as well as other initiatives.
What are the new developments in ESG regulation and disclosure requirements in the GCC and the Middle East that you would say are trending right now?
So I think the key trend really in the Middle East is the disclosure, and the nations are approaching this from the disclosure angle first, which we would think is a very welcome development, right? Because the disclosure creates accountability. The proper ESG disclosure helps investors assess the financial performance of the relevant asset and of the relevant company. In terms of just starting with the UAE, so the environmental disclosure in the UAE has been mandatory for quite some time. For instance, companies listed on Abu Dhabi Securities Exchange and Dubai financial markets have been, for the last couple of years, obliged to publish an annual sustainability report. and such report had to be aligned with the Global Reporting Initiative standards. As a follow-up to this more general requirement, both Abu Dhabi Securities Exchange and Dubai Financial Markets have also published their own set of ESG disclosure requirements, whereby they've requested that listed companies report against sustainable development goals. To be clear, the metrics they would report against would be aligned with the Sustainable Development Goals of the United Nations. Another, looking outside the UAE, in particular at Bahrain, Saudi, as well as Qatar, the exchanges and those jurisdictions have also published their ESG disclosure guidelines. Those are just guidelines; they're not mandatory, but the companies are strongly encouraged to follow such guidelines when it comes to ESG reporting, as well as they're encouraged to report against ESG metrics. Again, those guidelines, most of them are grouped around the Sustainable Development Goals of the UN, and they provide a very helpful framework for companies to report against those and to report how their activities correspond to those Sustainable Development Goals. The other notable development in the region, which we have welcomed very much, was the recent consultation paper, which was published by the ADGM in Abu Dhabi. Now that the consultation closed in February, and unfortunately we haven't had sight of the final set of rules, but we understand this is coming very shortly. But essentially what the consultation paper suggested was that ADGM listed companies, as well as ADGM incorporated companies and funds and asset managers, which satisfy certain thresholds in terms of assets under management set out in this consultation paper, would have to report on ESG metrics on a comply or explain basis. Basically meaning that the general rule is that the relevant company or asset manager would always have to report ESG metrics unless there is a good reason not to do this, and such good reason should be provided. And I think what was the most important here is that even though the consultation paper was not prescriptive in terms of what is the reporting standard to be used, they specifically mentioned two standards. One would be the recommendations of the Task Force for Climate-Related Financial Disclosures, and the other would be the ISBB standards. And they gave the relevant companies the right to choose which standard to report against, provided, however, it is a global standard. As such, when the rules come in, well, it will yet remain to be seen how the companies actually follow these recommendations and what standards they choose to report against. However, the hint which the regulator gave about the TCFD and ISBB is very helpful in that the companies are more likely to be reporting against one of those two standards, which would bring the ESG reporting in the Middle East, well, in the ADGM, let's say, to be precise, a little bit closer to the reporting standards we're seeing in more developed jurisdictions in terms of ESG reporting, such as UK or European Union. And finally, on the ESG disclosure requirements and on ESG landscape more generally is another promising development which we saw from Dubai Financial Services Authority, DFSA, which promised to think about ESG taxonomy, and it also informed the market participants that it's thinking about a regulatory framework for ESG, which would apply for all regulated firms, which are regulated by the DFSA, meaning a much wider scope of application, not only those listed, but pretty much everyone who's regulated. The DFSA said it would consider introducing requirements for regulated companies in 3 areas. One would be embedding ESG considerations in corporate governance and risk management. The others would be ESG reporting, and the other would be the potential UAE ESG taxonomy. It all remains to be seen how it all plays out, but from our perspective, the region and the UAE, as well as special free zones within the UAE in particular, are on a very right track when it comes to ESG disclosures and ESG regulation more generally.
Right. Now, talking about financing a bit, and what are the key financing challenges that you are seeing in the region as we move forward with the energy transition? And do you think that emerging sectors that are critical to the transition, such as, let's say, CCUS, hydrogen, they pose a greater financing risk?
Yeah, so you've raised a really good issue on sustainable financing, because a critical piece of this energy transition puzzle is securing financing to be, or adequate funding to actually be able to make that transition, to be able to hit these net zero targets within the stated timeline. So as you said, the Gulf states have very ambitious targets. They've said, there's certain deadlines they need to do by 2030, 2050, 2060. So in order to actually be able to implement it, you need to have sustainable financing. The issue, of course, is, in my mind, there are 3 immediate challenges that comes to mind when we talk about this, right? One is when we look at certain investment opportunities in the energy transition projects, it will be in markets which are perceived to be higher risk. The second thing, and as you rightly noted, hydrogen, CCUS, certain sectors which are key to achieving net zero, the demand hasn't been fully established. So this does pose a greater financing risk because it may complicate offtake arrangements, the way we do risk assessments for these projects. So that becomes a challenge that needs to be addressed as well. The other thing to bear in mind is that given the pace at which the transition actually needs to take place, many of the investors are also concerned about the risk of their conventional power assets becoming stranded assets. So what exactly happens to the traditional thermal power plants and all of those power assets which are in place already, right? But I would say that these are immediate challenges, right? So as Sergey talked about, once you have ESG frameworks and disclosure regimes are better developed, the technology around CCUS and hydrogen, and we're already seeing that, right? Like in the last 5 years, the technology has massively improved in the sector. And just the general transition towards clean energy and where investments are being made. So this, in my mind, will help to reorient the capital towards net zero and towards energy transition in order to actually effectively tackle these immediate challenges when it comes to sustainable financing.
Right. And with the UAE set to host COP28 this November, there is, of course, a renewed focus on the Middle East to take the lead on the energy transition, and more importantly, putting into action the region's, like you said, the very ambitious net zero targets. So I wanted to ask you that between COP27 and COP28 in the Middle East, what kind of activities in the region's energy sector are you seeing related to the transition?
Yeah, you're right. I mean, the spotlight on the Middle East is incredible, and the international community rightfully is saying, right, that the Middle East needs to show leadership and initiative in the ESG space. So in the energy transition sector specifically, we've seen a flurry of activity in the last couple of years. So green hydrogen is taking center stage. Generally, more investments in renewable projects, carbon capture and storage technology. For example, there have been 46 green hydrogen projects underway in the MENA region, which is a significant development. You're also seeing countries like the UAE, Egypt, Saudi Arabia committing significant funding to renewable projects in order to be able to implement their net zero targets. In Saudi Arabia, for example, around $13 billion worth of investments in renewable energy is already at close or at the tendering stage. Very similar story for the UAE as well. More than $40 billion in clean energy has already been invested in the last 15 years, and an additional $160 billion have been committed to clean and renewable energy in the next 3 decades. Saudi Arabia has said it's committed to 50% of its domestic energy needs being met through renewable energy by 2030. So it is a very exciting time for the region. And I think the months leading up to the conference, we're probably going to see even more commitments from the Gulf states for targeted investments and strategic opportunities for public-private partnerships in the ESG space.
Right. Now, COP28 itself is being pitched as a COP of action, a COP for all, a practical COP, if you may. So what are your thoughts as the global energy community takes up the challenge towards a just energy transition?
So I was listening to the news this morning about the world's ocean surface temperature hitting an all-time record high. So if you ask me, COP28 has to be a practical COP because the time for action is now. It just has to be, right? So I think the global community recognizes the challenges in terms of energy transition, and you can see that in many different ways, because it's finding opportunities to collaborate and bring the ESG agenda to the center stage. And you know, we're seeing that in the last year in almost every sector. We're talking about ESG being a very critical part of corporate agenda. We're talking about in every space, we're talking about ESG, which is very promising to me. What we do need is for all stakeholders to take this and bring it to the spotlight, right? So it's not just government-led, it's government, it's communities, it's corporates, essentially all stakeholders considering it, reviewing it, and incorporating ESG into their agenda, into their policies. And the developments we're seeing it in the renewable space. We're seeing it in disclosure requirements that Sergey just talked about. We're seeing it in sustainable finance. We're talking about in waste management. So I am hopeful for the future. I think I'm just an optimist at heart. So I think it's going to be a very exciting year for the Middle East and generally for ESG across the world.
Right. Deepika and Sergey, it was such a pleasure talking to you, and thanks for your deep dive into the region's ESG landscape and how its future would shape up.
Thank you.
Thanks for having us.
A big thank you to all our listeners for tuning in, and we hope you enjoyed this episode. As always, you can check out more podcasts, videos, and comprehensive content on energy at energyconnects.com. We will be back with more guests and experts from across the industry in the next episode of the Energy Connects podcasts. Until then, goodbye.